All right, good evening. Let me get things going here just a second. I was trying to answer that question there for Brady, and it's an interesting question. It's an interesting thought. All right, welcome, welcome back. Hope y'all have had a good, nice long weekend. I wouldn't say long; it's been kind of short. It was busy for us. Yeah, we've been out and about doing a few things this weekend, and it's just seemed to have kind of flown by. But that's all right. It's always good. Always fun to go out and do a few things here and there. All right. Well, let's get this show on the road. As always, if you have any questions, comments, concerns, ticker requests, feel free to shout them out, and we'll definitely take a look at everything. Looking at the ES right now during the overnight session, things are kind of stable. Nothing too crazy going on. We're trading pretty much flat. I am watching this 15-minute chart because this is where things have gotten a little interesting. You see, we've had this nice long trend since Thursday, Friday, and we're starting to cool off a little bit. And you can see that we've kind of lost the 15-minute 21. 5-minute has shown a little bit of weakness here too, as well. And the 1-minute chart is it's a little damaged. We can see that yellow is below red on the oscillator, and you're starting to get some negative thrust signals here on the 1 minute. So there's some general weakness out there at the moment, but nothing too alarming. Structure and trend seems pretty good on these longer time frames. But if you were to take a bearish bet, it kind of makes sense at this point. You can see that we did lose that 21. If they want to bring it down to the 50-minute, the 50 SMA, it kind of makes perfect sense there. But all right, just to kind of jump into things, last week we pretty much got rid of all the major catalysts out there. We did have Powell. We did see some language change in the FOMC minutes, and in fact, we saw that all market Fed participants agreed that raising the rate 25 basis points was the right approach. But yeah, they cleaned out the messaging there on the minute, saying that appropriate or further rate hikes may be appropriate. They got rid of that, which was good to see. So, we continue to see these pretty interesting moves, both to the upside and to the downside. We've had some volatility back and forth, and if we take a look here, let's see. Let's go ahead and bring this on over to the SPY. If we look at the SPY, you can see that we really didn't do anything new here. So on this weekly chart, let me bring up my arrows here. We can see that, it's very wicky. It's pretty much a mirror image of the prior weekly's candle, and all the main movement has really been in this tail action here. Oops, wrong. Zoom in here. Oh, that's why I'm not clicking the right buttons there. There we go. Structure wise, nothing has really changed. You can see that everything is still pretty much intact here. You still have, you get used to this. We still have, the 21 above the 50, the 50s above the 200. So weekly structure is pretty good here. Same thing here with the daily. 21 above the 50, the 50s above the year-to-date VWAP, and that's above the daily 200. So structurally speaking, everything's good. We're just kind of in this sideways range-bound market, and until we can get above at least 415, that's going to be the major thing there for next week. Looking to see if we can get a weekly close of at least above 415. If we can get above 415, I think that does set the stage up for a possible move there all the way up to the 430 level. The interesting spot here for the SPY is, let me zoom in here on the daily. Moving into here, you can see here on the daily time frame, you had this interesting squeeze that tried to fire bullish, and then didn't quite get to the move we were looking for, and then we started to enter another squeeze. And then if I zoom in a little bit more, you can see where it tried to start to squeeze to the bear side, and this is actually very unusual. This doesn't happen often. If you take a look at the, especially on a major index like the SPY, this does not happen nearly a lot. And you can kind of zoom out and go through a historical period and kind of see, when and if it does, which you probably won't find hardly anywhere. And you'll just see that it's just a lot of back and forth. And then it kind of brings us to the question of, okay, is this a good market to swing trade? And, we can answer that question just by examining a few of the major players here, especially with the major indices and even the bonds and the structure of the overall market. So, yeah, we had a very unusual spot here with the SPY. And it kind of just shows us that day trading right now is, according to the SPY here, is definitely the way to go. But if we kind of go down and do our little checks here, we can see that structure. This is still good. You still got the 21 above the 50, 50s above the 200. This is, neutral bull. I say neutral bull because it is above the 50 mark on the oscillator. Yellow is above purple, so that's good. And we still have active bullish thrust here on the signal here. And even looking at the weekly chart, we still have active thrust here. The one thing that is maybe a little bit concerning here on the SPY is where we had, the nice bullish histogram here on the weekly chart, the weekly squeeze, starting to fire along here. But now we've gotten this down tick. You see where the light blue has turned into a dark blue tick there. So that is kind of concerning, and we want to definitely pay attention to that. But for the most part, everything's still okay here as far as the structure goes and everything else. So watching this 403 level, if we happen to lose 404, 403, especially if we lose the 50-day SMA, that could, get nasty pretty quick here. But that's what we're looking for on the downside, a break below 404 or a break above 415, especially a weekly close above that 415 level. Let's move on over to the NASDAQ, the Qs. And this is by far the best looking index out there. I would argue probably one of the best looking things out there, period. Alignment looks great. It does have this possible breakout pattern here that we are watching. Let's see if this will work. I may have to close that out and redo it. Yeah, give me 1 second. This thing is being a pain. Let's go back here. See if we can reload that, make it work a little bit better for us. All right, so there we go. Draw that. All right, so it's got a little bit of a breakout pattern that we're watching. You can see where everything's just nice and tight here around that 322 mark. You can see that the daily structure of everything is looking pretty good here on the NASDAQ. You got the 21 above the 50, the 50s above the 200. So this gives a nice little check here. You got a nice week daily squeeze here. This is just a little bit of a bonus move here. This is bullish positioning on the oscillator. So this gives us a check mark here. And we still have daily thrust signals here. And we have not gotten a single sell signal since then. And that was back around the week of 313 and 320. Yeah. So everything's been pretty good here. We do have a nice weekly candle hammer on the weekly. That is good. You can see that the histogram on the weekly squeeze is still pretty bullish. This is neutral bull. It's a little bit incorrect because yellow is below red here, but still above 50. So this gives a little bit of a go ahead here, but tells us we need to look down at the thrust signals. And what do the thrust signals give us? We get some nice buy signals here. So this is still very much so positive here on the NASDAQ. So some really impressive stuff here within the Nasdaq, and I'm watching for the break of really 322. Once we get above 322, then we could see a push all the way on up towards about really about 330. Let's move on to I'm going to give you an interesting one here, which is the RSP. And you're going to ask me, what in the world is the RSP? Well, you might already know, especially if you've been listening in for a while now. The RSP is just something to have in your back pocket. Think of this as it is the equal weighted SPY. So think about the SPY. It is its heaviest weighted stock is Apple and a lot of the major players. Apple, Microsoft, Google, and all those guys. With Apple being pretty much the largest company in the world, anytime it goes up 1%, the market tends to move off of that. But when you take a name like Clorox, which is nothing within the SPY, you'll notice that, say, if Apple goes up 1% and Clorox goes down 1%, what's the market going to react off of more? Most likely Apple. So we know that the market is pretty much being, I would say, carried by the big boys: Apple, Amazon, Google, Microsoft, Meta, all those guys. The weight of these big companies is really driving the entire market. And if essentially if the big boys are moving things up, this could improve a little bit here, kicking and screaming. Although, but what the RSP does is it takes everybody in the S&P 500 and it just lays them all on an equal weight. Everybody's worth the same, and it gives us a balanced look of the market. And when you look at this, you can see, well, this isn't as nicely laid out there as compared to the QQQ that we just looked at it. So if we take a look at the QQQ, you can see that the Nasdaq is, the prettiest thing in town, whereas the RSP is its not so pretty cousin. You know what I mean? So if we take a look here and examine the differences, you can see that, the structure wise, it's a little bit sloppy here, maybe even a little bit of a bearish bias to it. We're kind of hanging around the daily 200. We do have a daily squeeze that is trying to fire short. This is technically a little bit neutral, maybe neutral bear with the oscillator. Yellow is below red, and it's right there at the 50 line. But we also have a bearish thrust signal here on the RSP. So that's telling us that, okay, not everything out there is, peachy keen. And what I would like to see is, especially from a swing trader's perspective, is you want everything to be in an agreement here. So we know that tech looks great. We know tech looks great. But this is starting to give us our first, red flag here. We want to see the RSP at least get above this 146 level. And it can easily correct itself through time, of course. And, maybe, we'll see if we get any changes through that. But for now, it's a little bit giving us a, hey, be careful, guys. Not everything is what it seems to be. Although, of course, like I said, the market doesn't work like that. We know that if Apple moves, then the whole market will kind of follow suit. Same thing with any of the other big guys. If Microsoft, Apple, and all them are moving, then everything's just going to be kind of dragged up with it. So we want to kind of watch the RSP, maybe on a weekly basis, maybe every other day, just kind of depending on, what your style is to kind of confirm where things are heading. But when I look at this and go, okay, if I want to swing trade a few things, is everything in agreement here? And when you look at this, you're going to easily say, not so much. We got green lights on a bunch of things right now, but so far the RSP is saying not so fast. It's a little uninspiring. So just kind of keep that in your back pocket. Let's move on to the IWM. And, this has been the problem child for the overall market in general. The Russell 2000, it is our small caps. And you just may ask the question, well, what is exactly the Russell 2000? It's an index that uh, reflects the prices of the 2,000 small cap companies, and unlike its high concentrated weighted averages like the SPY and Nasdaq. The Russell 2000 does not allow a few stocks to dominate its percentage weighting. When it comes to sectors, though, its highest weighting is the finance sector, the health technology, and technology services. And you do have a high presence of those regional banks, the KRE, which explains why it is lagging so much in performance. So when we watch the IWM, we essentially have to watch the KRE. In fact, we started to watch the KRE as one of our uh, day-to-day market internals, because anytime that the KRE or any of the main regional banks started to move higher or lower, the market kind of moved with it, which was kind of interesting. Sometimes they tie some things together, and when one of them moves, that's where the market tends to follow. And we definitely saw that the other day, especially with PACW, WAL. We definitely started to watch PNC. PNC is a big weight within the KRE, but until things get smoothed over here with the KRE and the regional banks, you're not going to see a whole lot of improvement from the IWM and the small caps. Not to mention all the headwinds from the rate hikes and the Fed keeping things the way they are. It's going to continue to be a nonstop pressure, a downward pressure for these small cap names, uh, the junk of the junk, so to speak. So, you know, with and if this was just by itself, the IWM, if you just take the IWM by itself, don't look at anything else, you would look at this chart and say, well, this is a short. You got this bear structure, 21 below the 50, the 50s below the 200. We are below the trading equator. You have a squeeze, which is still pretty bearish. This is just a bonus, so we have bear structure. You can put an X up here. We can look at the oscillator, and we can see that this is bearish positioning, yellow below red, and it's below the 50 line. And we also have a bearish thrust signal here. So just taking a look, even at the weekly, I mean, that's nasty. This is pretty bad. The structure is pretty bad. Sure, you could say, well, we were kind of just trading in a range, and yeah, that's an argument. But if we look at the daily, you can see things aren't as pretty as tech. But as we know, when tech is absolutely booming, that will drag up the SPY. And if the SPY is dragging up, that's going to start to drag up the IWM. So we definitely, this is a little bit hairy of a situation here for the IWM. It makes it a little bit tricky. Like if this was just by itself, I would hands down be swinging short the IWM, looking for a break of that 170. But that is not the case here. Things move together in interesting and connected ways. So yeah, we'll just kind of have to pay attention to see, what happens with the regional banks this week. It is a news-driven market here with the IWM, and we'll just have to take things one step at a time. But if I were just looking at the IWM by itself, it would hands down be a short until it gets above 180. You just kind of have to remain on the sidelines and play better names out there. And the better names out there are hands down uh, big tech. Mild, I don't know what you're playing, but I'm muting you, buddy. That was funny. All right. So moving on from the IWM, let's take a look at one more thing that we can look at. Well, two more things actually. Let's move on to the HY. Yeah, we'll take a look at PACW. So it's the same thing across the board. So if we take a look at the KRE, if it will type for me, here we go. KRE regional banks. I mean, this was a bear flag of all bear flags that you could possibly ever want here. There you go. Bear flag. You had the breakdown below 41.28. You got a little bit bounce here, thanks to everything, but KRE is absolutely busted. So whatever's true for KRE is probably going to be true for Pack W. I mean, looking at the KRE, very bearish. I There's not much positivity to say here. Now, would I short down here? Absolutely not. This is, when you shorten the hole, that's when you get your teeth knocked in. You want to see this thing continue to bounce, maybe retest that 41.28, and that's when you want to get short. Once you start to see that this comes back up to support, retest that 41.28. And then you start to see, okay, this is going to confirm that this is now acting as resistance. Uh, that's when you want to short it. So you got support, 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 and starting to see some cracks here. You crack down, and now if this thing comes back up, you're going to want to see 41.28 act as resistance. So keep that in mind here as you start to look at some of these regional banks. Pack W, is it a bottom? I don't know. I don't try to catch falling knives. But this thing looks pretty gross. And it's the same thing. It looks just exactly like the entire KRE sector. Uh, anyway, so you had this nice little bear flag breakdown on Pack W. Is the worst over? I don't know. Does anybody know? No. If they tell you they do, then run away from that person because they absolutely do not. Uh, but yeah, you got this nice little bounce here at 248. I mean, look, this thing was trading at around $51. It's trading at 248. This thing is damaged. Damaged goods. I appreciate you, mild. No worries. You could see a bounce up to this about 8. We'll call it 9. We'll just call it 9 even. Uh, it's got a lot of work to do as far as things go. And then we'll just go down the line of things. First, we always look at price, right? What is price doing? It well, it's not too good. You had this neutral area, then we broke down, we formed a bear flag, and we broke down again. Path of least resistance does seem to be lower, and you can confirm that with the moving averages. Moving averages are good for confirming erratic price action, and it's just a tool in our toolbox. But yeah, you can see you got a declining 21, a declining 50, and getting a declining 200 as well. So the moving averages do confirm, yeah, this is definitely a downtrend here. So this is bearish. If I look at, I mean, you got good volume. Sure, you can use that. Okay, well, huge volume came in. You can possibly use this as a tradable low, but as soon as you break below 248, that is a no-no. Get out, run away with your tail between your legs. And trust me, they halt these things left and right, left and right. So if you get in, you better get ready to get out. With profit, or hopefully your stop loss and risk management help you out there. But you have to be careful if you start to play these beat up regional banks, because you just never know what's going to happen within the next few moments. So yeah, if you want to use 248 as a possible tradable low, you might be able to do that as a plan. But have your take profit zones, and that would be up here towards that $8 mark, where you get a retest of the daily mean. But when I look at the other signals here, you can see that this is pretty bearish. So this gives me nope. And we haven't had a bull signal yet. This is still giving me down arrows here. So this gives me an X. So, this tells me to, stay out. I have 1, 2, 3, and I would say this histogram is also, pretty negative. You can see that the red tick did get an increase of the red tick. So this is still bearish here. So 4 out of 4 signals is telling me I shouldn't be a bull here. So for that reason, I am not a bull at all for Pack W. Let's see. Let's take a look at PNC. PNC is a little bit bigger here. Same thing. Bear structure, price moving lower, moving averages moving lower. You have a daily squeeze, which was actually pretty nice here. You had a daily squeeze trying to, well, it didn't try it. It did break to the downside. This is bearish, and this is also bearish. So even on the bigger PNC name here, This is pretty bearish here. Now I'm still I don't want to short it when it's down here. I want to short it when it's back up here. Maybe. You know, I don't want to get too involved in these regional banks just because it's such a news driven market, and anything can and will happen. All you need is a news event to either make or break you, which is why I'd rather not be involved with them. There's better things out there than the regional banks. Would you rather play PNC, or would you rather play, say, Pepsi? I'll even give you something easier here. I mean, Pepsi's just on an absolute all-time high breakout. You know, Tech out, any tech. I mean, Apple on a rampage right now as well, and we kind of talked about this. So, know where the sectors, know what the sectors are doing, and who's bullish out there and who's bearish. XLK in general just tells me, what looks better, XLK, the technology sector, or does the regional banks look better? Where's my money better working for me? Is it, trying to bottom feed off this KRE shenanigans and where I might make it out alive? Or is it better placed in XLK? I like the XLK chart a little bit better. It's got a nice little daily squeeze. We already talked about tech, but this is bullish. This is in a nice move here. You're trying to get this breakout. I mean, I don't have much to complain about. So, if it just save yourself a lot of the headache. What's working out there and what's not working out there. Tech is working out there. Regional banks are not working. Yeah, Netflix. Yeah, communication sector in general is pretty interesting. Netflix to me is kind of weak. Uh, in comparison to like Meta. But yeah, Netflix is at this interesting position. I actually still have a swing short on Netflix, but I am looking for this breakdown below 316 for a move down to at least 304, 305. Now, once we do get a move above 332, sure, I'd be more than happy to switch gears here and maybe go long. But you got a nice little tight range here between 330 and 316. It is a little bit interesting, and what does concern me about my swing short is that this histogram did shift. Little gave us a yellow tick here from red to yellow, so I definitely want to be mindful of this. But I do have a negative thrust signal here, and this is a little bit neutral. It's right here on the 50 line, so we want to pay attention. If this gives me an up arrow, I'll probably go ahead and get out just because I don't want to get stuck on the wrong side of the trade there. But for the most part, Netflix is just kind of sideways. But I am leaning a little bit bearish here with the possibility of going, okay, I'm know when you're wrong kind of deal. I'll take things off if we break above 330 and just wipe my hands clean and go from there. But if we look at the XLC in general, and this is going to contain names like Netflix, Google, Verizon, Disney, we can see that the communication sector is actually not too shabby at all. So, it is kind of like playing a little bit with fire here. But you do have positive structure here. The 21 is above the 50, 50 is above the 200. Price is right here on the 21, which is nice. So if things want to push higher, maybe look for the communication sector to kind of lead the charge, which they have done so all year long. Last year and the year before that, we saw the communication sector lead things down very quickly here, just absolutely getting clobbered. And it seems this year things have switched gears and, moving up pretty well. So if communication sector does get this breakout above pretty much the 60 level, then I think things are setting up for a bigger move. But looking at Google and Disney, things are a little bit interesting. I'd probably say it's a little bit neutral here. Yeah, Netflix. Yeah, I'm still looking for some downside here. We'll see if we can get it, especially since we are trading below the 21 and we're just kind of hanging on and teetering right here on the daily 50. But overall, I'm looking for that breakdown below 316. I just kind of want to pay attention to where the signals go if I can get any a little bit more information here. So I'm in the position, and now I'm just waiting to see what unfolds. But I like the probabilities here to see if we can't shift this thing on to the downside. Let's see. Let's move on here. Let's see. We talked about the IWM and the KRE. Let's take a look at the bonds, and I want to take a look at the HYG. What is the HYG? It's the junk of the junk. It's the junk bonds. Uh, Ideally, this is one of those things like, how do I know if if this is a good market for a swing trade or for day trading? And when I look at the HYG, we can see that we had this interesting move to the downside, but it's not as clean as the QQQ. If things are going to be trading up here, then I really want to see the HYG trade up here as well, and to kind of give us that confirmation that, yeah, even the junk out there is doing really well. Now, we did have this nice candle here on Friday, which confirmed the move for Friday. So that's good to see that, okay, everything is joining the party, including the junk. But if I look here at the HYG, we can see that we have a daily squeeze that is trying to give us a little bit of a headache with a negative thrust here. This is still bearish. We're still below the 50 on the oscillator, and we do have yellow over purple, which is interesting, but still below the 50. So I do have to give that a tick for the bears here, but I also have negative thrust as well. So this is a no. This is we'll say neutral bear just for the sake of it. But this is also a bear signal here. And yeah, so it's a little bit messy here for the junk bonds. And this is just telling us, okay, there's maybe some hesitation out there. So that gives me two things to kind of work with. We got the RSP, the equal weighted S&P 500. That's saying, hey, not everything is nice out there. It's the big boys. And I have the HYG. Let's move on to, let's see, where do I want to go from here? Let's just go to the bonds and more bonds. Let's go to the ZN. Let's go to the 10-year. The 10-year treasury note. Now, this thing looks like it does want to push on higher end. What I want to bring your attention to here on the bonds, you have a 50-200 cross right here. I want to bring your attention to this, and it could be it could be a nothing burger, or it could not. We'll see. This does look like things want to kind of break out. Now, we did have that interesting jobs data from the government on Friday, where unemployment's at record levels, record level lows. At 3.4%, I think was the number. And then we had this crazy non-farm payroll that was just mind-boggling, like greatest recession ever, right? And that cooled things down here a little bit. And it's like I don't know if this is manipulation. I'm not going to get into that, but it definitely cooled down the bonds a little bit. Now, I point this out here with the 5,200. Now, if bonds are going to push higher, which they want to, then that's going to definitely be a tailwind for tech, and that could definitely send things higher. It definitely shows that there is some progress being made under the hood. Now, my challenge is, when was the last time that the 50 crossed above the 200 on the bonds? It's been a while. I have to go back 5 years to find it. Let's see. There you go. Right here. Now, I'm not saying like this is it. We're going to new highs. Rawr. No, this is just one of those analysis tools that you go, okay, this looks pretty interesting. Last time this happened, we had a nice little run, and an even bigger run there. Nice little wave. So yeah, it's been since 2019 since we've had this cross of the 5,200, and we're starting to get that. And yeah, it took some time, and here we are. So bonds in general seem that they do want to break out. If this is the case, then tech can easily play on this dynamic here with the bonds. And you'll see this too here with the ZB, the 30-year. And if the 30-year can persist here and push above 132.18, then yeah, that's another pretty interesting signal. And let's see here, starting to get some ticker requests. We'll take a look at those for sure. I've talked a lot about the reversion of the 2-year and 10-year that we got to pay attention to, of course. Let's move on over to crude oil. Now, crude oil, this is an interesting spot for crude oil. I'm not really a bottom knife catcher here, but you got an interesting signal here. You got this nice little move here, nice little hammer. I wouldn't even say a little hammer. That's a big hammer. Double bottom. You can even see where they tried to send it in, send it on down. And guess what happened? Oopsie. Bears got trapped. You ate them up. Let's see if we can draw that. There you go. There's your nice little tail there. And you pushed on higher. But that is all it is. It's just a nice little trap here. And you're getting a reversion to the mean back to the daily 21. But for the most part, this is still bearish. This is still bearish. So I'm still not quite interested in oil at this time. Even on the weekly, you got a nice little weekly chart here. This is negative, and we still have negative thrust on the weekly chart as well. So looking at crude oil, probably not the place to look at this time, although it could continue to see a little bit more of a bounce, maybe back towards 75. You can see here on crude oil where we did get a attempt to break above resistance here at 82.64. We tried, couldn't, failed. And what happens when you have a failed breakout? You have an even bigger move to the downside, which in this case is what happened. You rejected, failed the breakout, and you came all the way back down to retest the lows. So crude oil, a little bit nasty, not the best spot to be in, but if you want to, this is a possible tradable bottom, although I'm definitely going to stay out of it. Nat gas is not doing anything right now, so I don't really care to watch nat gas. Hey, Maria, I just saw you ask about ZOM. So since we're talking about crude oil, we'll take a look at it. And I see that I got some other tickers up there that we'll take a look at, of course. ZOM, yeah. I mean, this is that failed breakout move. And, I was, in fact, long on ZOM. And we had a decent move here and then broke down below it. And I can't remember what day did we get out. It was before earnings. I think we got out right here. I sold partial here. I know that. And then I think I got stopped out back here before it reported earnings. But yeah, you can see that failed breakout dynamic there on XOM where things tried to push. You had a pretty decent move towards a 120. And then you got that failed breakdown. And it just kind of shows you that you had this retest of the 200. Now, the weekly structures, sure, you're still intact here. I mean, you still above the 21, the 50, and the 200. You do got a weekly squeeze shaping up. So what you want to see here is, can the daily structure hold up and, maybe get back into a daily squeeze? It's got some time to kind of do that, but, it definitely, has some work to do. I do have some negative thrust here. This is, we'll say neutral because this is still above the 50. This is a little bit concerning with the momentum shifting on the histogram, still pretty negative there. I just probably wouldn't touch oil in general right here, but we know that oil does have its days and it can push up. So what you want to see here on oil is things to get another bounce, maybe retest support here at 113, see a rejection, and then possibly short it back down to at least the daily 200 at 105.45. Now, if you are trying to say do a longer term trade, I'm sure there's plenty of buyers right here on the daily 200 that use the daily 200 as their benchmark. Your 50 still above the 200, and traders still use that as a long term benchmark. Whereas, you get these nice pullbacks to the daily 200. That's a possible buy area. You can see that volume, though, is pretty lackluster here. I don't really see any good reason to be involved. It does pay a nice dividend, 91 cents. So we'll see what happens. And seasonality speaking, once we start getting into the summer months, maybe we'll start to see a a bigger turnaround with crude oil. We know oil does get more pricier in the summer months. So we'll see as we progress towards that. We're still kind of early spring. So we still got some time for things to kind of set back up in Zom. So not all is lost by any means. So yeah. Let's see. Mild wants to take a look at Oracle. Yeah, Oracle's been one of the best looking things out there, and this is actually going to be on my radar this week as well. You had this very nice breakout move on Friday with everything else out there. You have a daily squeeze that's firing long. You have good volume here also. This is in bullish positioning. You have an up thrust here since March 30th. So structure is good. The 21's above the 50, the 50's above the 200. So this gives us a check. Squeeze, this is a bonus. So that's nice. This gives us a check here on the oscillator, and this gives us a check mark here. So on the daily, we got 4 out of 4, where we can say, yes, we can in fact try to go long here. So 96.42, big breakout level. If you want to try it, 100 will be a psychological number, and then 105 is going to be your next spot where the all-time high zone starts to play in a role. Yeah, this is great. This is a very nice bullish chart. It's been a good runner for the entire pretty much 2023 year. It's been a leader out there. So I actually really like Oracle. It's been, very nice to us. I think even Penny got on board on this before the start of the new year. And it's just been a nice trade just in general. If you've had shares since we've, called this out or whatnot, and yeah, no complaints whatsoever. Even on earnings, you had a nice recovery there. Bull flag breakout here at 96.42. Yeah, looking for 100 and 105, maybe even a new all-time high breakout, because I don't have anything to suggest that things are going to shift gears here. So I like Oracle a lot. Looking forward to trying to make some more out of it. Nice chart. Booze got caught in the bear trap in cost on the daily. I think it's time. Sure, let's take a look at Costco wholesale. Yeah, this is interesting. When I think of retailers, I definitely want to look at Walmart too, just to see where Walmart is. Walmart, just as a comparison, it's not bad. 21 above the 50, 50 above the 200. You got a nice little daily squeeze. This is oscillator is pretty good, and you got a little bit of a back and forth on the thrust. So it's Walmart trades kind of funky. I will say that. But yeah, Walmart's looking pretty good here. So let's compare that with cost. COST. You do have earnings coming up in a few weeks. All right, we got a lot of sideways back and forth action here, and you kind of get that confirmation on the erratic movement of the price with the moving averages. You see how these moving averages are just kind of all over the place. Oh, it's sideways. So what does that tell us? Let's take a look at our other indicators here. We're also got to keep in mind that this is below the 200, but it can easily get back above that. You can see I do have a level here at 511. I like it above here. I think that's a lot better positioning. In fact, I kind of, and we've seen this a few times where we're in this sideways market and then you get earnings and you gap above these levels and you just go. But you could say that for the downside here. If you lose 477.60, things can get a little bit nastier, especially with the structure being the way it is, just kind of sloppy. So someone's going to give at some point. You do have a daily squeeze. Now, you do have yellow below red. This is a little bit concerning it because every time we seem to uh, kiss the red line, it does seem to act as a little interesting resistance here. So we haven't really had that bump where the yellow pops above the red, and we get a little bit of back and forth on the thrust with the latest signal saying, hey, be a little bit cautious here. But this can also be negated if the red line comes back up. So yeah, it's a little bit messier here on the daily. We may need to zoom in real quick Let me take a look at the weekly time frame here. This is a little bit more interesting. It's trying to do something here. You do have a squeeze going into earnings. You have a little bit better signal here. This is neutral bull because it is above the 50 line, even though yellow is below red. So we pretty much just have to ignore this and go here. And that's telling us, hey, there's an up signal. But then we get over here, it's, hey, this is messy too. So let's go over to a smaller time frame. Let's go over to a 2-day first. Let's kind of go up one. How about that? Let me go. Oh, I don't know why I need to do that, but there we go. Let's go to a 2-day chart. Yeah, that doesn't really do me much either from the longer term. So let's go down one. Let's go to a 4-hour. Histogram shifting from red to yellow. Structure is a little bit better here, so I like that. Let's go to a 1-hour. 1 hour, it's improving, but it still has some work to do. Man, this is so neutral across the board, it seems. The 21 looking to get across above the 50. You do have a nice little close above here. You maybe got a little bit of resistance here that we have at 500. So let's call 500 an area of interest. And for a move to 512, once you get above 511, 512, that sets the stage up for higher. Let's see. We do have positive thrust here. This is neutral, but you're above 50 for the time being, so that's good. So we'll give this a check minus. I caution on that because the structure isn't really fixed. This is neutral, but you have thrust. So that gives us an interesting picture here as well. So let's go down another. Let's go to a 30-minute chart. Yeah, so you've got that 30, that 21 crossing above the 50 on that one, but you still have some work to do if these moving averages can continue to correct themselves where you have the bullish alignment there. But this is a start. That's positive, good volume, histogram's good. This is still neutral. A lot of neutral signals on cost. Even if I go up or down, you get some interesting parts and some not so interesting parts. So what am I doing on Costco? I'm probably going to wait. Probably going to wait and see what happens. Let them sort itself out a little bit more and then go from there. Maybe see what's happening around Tuesday or Wednesday. 511 does seem like a key. Yeah, I like this 511 level. If we can get above that 511, I think that'll be pretty sweet. Break above 511, 530 would be a pretty interesting target. And then 540. So you got some pretty interesting spots there to work with. I don't like the shift of this histogram, but that's just kind of being nitpicky. Where you have the light blue shifting back down, so momentum did kind of shift just ever so slightly, kind of like what we saw with the SPY. But all right, yeah, just kind of give it a little bit more time. Dollar Tree. Sure, let's take a look at the Dollar Tree. Yes, yeah, see, there we go. Here's another retail name here that we want to take a peek at. Now, I like this one a little bit better than Costco. Let's see. The only gripe here on Dollar Tree is that the 50 is not above the 200. So you got the 21, you got the 50 that's trying to curl. You don't have the cross yet, but that's okay. It's just a minor thing. Well, I wouldn't say minor. It's just part of the rules. You got some resistance here at about that 155, 160 zone. If we can break above that, that does set the stage up to 165. Actually, I'm going to throw this on my watch list for the week. 165 weekly is looking pretty decent. You got a weekly squeeze. This is okay. This is bullish. Let's go over here. You do have, looked like you were trying to enter a squeeze and gained a little bit of momentum on good volume there on Friday. This is bullish. Yellow above purple. You're above 50. And you have thrust signals here as well that are in charge. So let's see. We have, we'll say 3 out of 4 on here. And then on the weekly, let's zoom in on this real quick just to get a better picture of that weekly squeeze. Yeah, starting with that looks good. With the thrust signals, yeah, if I were to pick DLTR or cost, I'd probably look at Dollar Tree first, and then play cost once things set up. And I don't think do we have earnings in a few weeks as well. That could be interesting. So structure is not quite there on the weekly chart, but that's negotiable. I like the weekly squeeze here. I like the oscillator positioning, and I like the thrust signals. Let's see. I'd probably say this is 3 out of 4. So you got about 6 out of 8 signals here on DLTR, which not bad, not bad at all. So I like Dollar Tree above. What's that level? Let's mark it on the chart. Let's go over here. Scrap that. Let's see. 156. Yeah, 156 to 158, and you get a nice little gap fill too towards about 164, 165 zone. I like this a lot. So yeah, this is going to be on my watch for next week. For sure. Speaking of that, let's see what else are we going to see. Oh, we need to do our conclusion. So with our, what the main question that I was asking at the beginning of the session was, when are we still day trading? Are we trying to look for swings? Sure, I have a few swings. They are a little bit on the riskier side, but if we want to be a little bit on the safer side, we still want to see things kind of level out and confirm where things are moving. So with the HYG, the RSP, it's not quite there yet. It's almost there. And we want to keep in mind that things can change very quickly if big tech starts to give us any kinds of headaches or frustrations. If things start to give us a deeper pullback, then we're going to start to look for maybe some possible short positions. I think Adobe was one of my ones. I'm like, this is showing some interesting possibilities. I also like Simon Property Group of the XLRE real estate sector. You do have a nice daily squeeze here. Nice daily squeeze. You have a bearish positioning on the oscillator. My pin's laggy. And then you have a bearish signal here on the thrust, and we have negative structure. So this is good. This is good. Or I guess you could say it's bad. It's bad. It's bad. But this has given me pretty decent signals to short this thing. So I'm tempted to grab a swing short position on SPG if the market conditions, tell me otherwise. But I like SPG as a possible short candidate if we do start to see a little bit weakness. As far as the economic calendar goes, we don't have anything on Monday and Tuesday. We start to get our inflation data on Wednesday with CPI. We also get PPI on Thursday. We get our jobless claims. We do have a few Fed speakers sprinkled in and around the week, so we'll have to pay attention to that. And Friday, we get our preliminary Michigan consumer sentiment. We'll have to be aware of that. But for the most part, yeah, pretty interesting stuff. Of course, I'm going to be watching the big boys. Let's see, Microsoft, you had this nice breakout on the daily chart, broke out of 309, pushed towards 312. Sure, it's extended. No doubt about that, but momentum can continue to push things on up. NVIDIA looks pretty decent here as well, looking for a breakout above 290 for push to 300 and 305. Pretty powerful stuff there. There's some good XLP names. We talked about Pepsi earlier. Coca-Cola looks really well. And Bitcoin names. Bitto is an interesting component to this play. But Riot and Mara look pretty darn good. Here's Riot. You got good structure. The 21's above the 50. The 50's above the 200. I would like to see a yellow tick on the histogram here for the squeeze. This is neutral bull. The yellow is above purple, but purple is below 50, yellow is above 50. So this gives us a little bit of a check minus, and we have positive thrust here. So this looks pretty interesting. We're looking for a break above 12 for push towards 13 makes life a little bit easier there with those whole numbers. So I'm watching Riot, also like MSTR. Uh, yeah, these look pretty good to me. If I'm looking for some bear moves, I'm watching maybe be looking at Abby. I talked about Adobe, SPG. Let's see, Myrna also comes to mind here. If we want to take something there. So yeah, we got these bearish alignment. We see here that we haven't even had a bullish signal on Myrna since February. So this thing is still in. You can still work off of that signal. This is bearish. If we start to see a red tick down for Myrna, you did get a reversion to the mean after being at about -3 ATR. Yeah, interesting spot here for Myrna if they want to either send it back down or try to push things back up. I have to pay attention to the XLV in general. But yeah, other than that, yeah, I like DLTR. That's going to be on focus. I like Nvidia. Let's look at AMD real quick because AMD had that news with Microsoft. I'm looking for a move above 91. We'll call it 9160 to push things higher up to about 93. I like Nvidia's chart a little bit better, but AMD's got some hype around it, of course. So we'll pay attention to see what they want to do there. Let's see. Oracle is also going to be another one to watch this week. Roblox does have earnings this week. We'll pay attention to the Roblox. They make tons of money from children. I don't know many parents who don't know what Roblox is and Robux. But yeah, Roblox is beaten up right now. You got earnings. What is that on Tuesday, Wednesday? We could see a reversion to the mean. Yeah, this thing's just so beat up. It's just pretty crazy. Hasn't really done anything for the past 4 or 5 quarters. It's just been a little bit sideways, although you could argue, well, on the weekly chart, you've made a little bit higher high here. It's just a very minuscule movement. So we'll see what happens with Roblox, of course. But yeah, there's a lot of interesting stuff out there to kind of work with. But any questions, ticker requests, throw them out. We've had a few. And if not, we'll close up shop there. I will be here. Oh, yeah, tomorrow. Let me do some. Tomorrow we have Chris coming in. Let's see. You'll get me, and then I'll have to turn things over to Chris at 10:30. We're doing a session on investing in rare art, so that'll be interesting. I don't know if anybody, does rare art, but yeah, that'll be fun. Tesla, yeah, let's take a look at Tesla. Yeah, now Tesla, this thing's been a drag. You see, I got levels all over the place because I love to play this thing, but Tesla, it was quiet. All last week it was quiet, and we finally got a little bit of a breakout move here on Thursday. We had this, you could say, mini Darvis box here, where it was trading between 166 and 158, 159. And finally, Tesla decided to jump on the bandwagon. We even day traded this on Friday if you were in here with us on the live session. We caught this upside move above 166. We took it all the way up to 169. We're hitting the daily 21. Now, if we do see some volume kick in here tomorrow, this could see a gap fill, although this is a pretty interesting spot for Tesla to be because you have a shifting histogram on the daily. This is technically still pretty darn bearish. You're below 50. Yellow is below red. So this is bad. This is, this gives you the frowny face like, oh no. You have a negative or a bearish thrust signal here as well on the daily. The weekly chart, you still have a negative thrust signal in play as well. So yeah, things are a little bit interesting. It does have the opportunity to maybe give us one more good pop, maybe even fill this gap. And that, Tesla, when it starts to move, it can definitely move. So it's hard to it can be tricky to trade just because when it moves even to the downside. But looking at that, the signals that I do have, I'd be leaning, bearish. But let's take a look at some of these inside time frames here, starting with the 4 hour. You have a 4 hour squeeze that's trying to fire long. If this crosses above red, that could be interesting. And then I would also be paying attention to any up signal here. We would get a white arrow first. So that'd be something to look into. But you can see that it's got a lot of stuff to kind of push above. You got the year to date VWAP at 173. You got the 50-day moving 50. Well, I guess that would be the 50 moving average on the 4 hour. That would be at 175. So you got some headwinds right there. Let's move over to let's just go to a 1 hour chart. 1 hour chart, you had a squeeze on the hourly that pushed higher with a thrust signal to the upside coming into that year-to-date VWAP. And yeah, so I think this is, you either push higher and try to get that 176 move, or you just shimmer it on down. Let's go down one more. Let me go to a 30-minute. Yeah, 30-minute looks pretty good. So you're starting to see that improvement on the smaller time frames. 21's above 50, and you're getting that above the 200. I can see the case for a pullback to the 30-minute 200 at 167, and then from there, kind of see where things are going. It's trying to fix itself here. It's still got some work to do. You still have active thrust signals here on the 30-minute. It's an interesting one to say the least. But if I were going off the daily, maybe we'll start to enter a daily squeeze since the histogram has shifted from red to yellow. Give it a few more days there. This is still bearish, and this is still bearish. So if we still continue to shape things up, I would look for a squeeze and then possibly even a short. Why? Because the structure, white is below blue, blue is below red, but it might take some time, of course, and we could still see a pop higher. So it has a possibility of coming in higher with the backdrop of saying, hey, these signals are still intact even on the weekly, and I would be looking to short this thing at least a gap fill towards 144.45. That would be my overall target here, down here at 144.50. That's how I would approach Tesla. Let it set up. I like it for a day trade to the upside, but a possible move lower on the longer time frames. All right, sweet. You're short of 130. That's a long. That would be a big target, but 130 is also an idea. Yeah, I could see that. Yeah, I like the upside potential for a day trade. And then when things start to set itself back up, maybe getting into that daily squeeze, short that thing, start to short it. So I think you might be early. I think that would be my only concern, is you got in a little early. I hear you. Yeah. I feel you. All right. Let's see. That puts us at an hour. So that's good. All right. So day trades, in my opinion, are still the way to go for now. At least things are really close to being there to take on swing trades. And what I mean by swing trades is anything longer than, for me, anything longer than 3 days. SPY, we want to see the weekly close above 414, 415 to put us into a new move back up towards 418, even to 430. Tech continues to look impressive. This tech just looks really good. Yeah, this tech chart looks pretty good, but it is also a very crowded trade. Keep that in mind too. RSP is not quite with the program, the equal weighted S&P 500. We can see that does give us some cautious flags. Also, the HYG, the junk of the junk, says not everything is quite moving along with you, but we know that if big tech is running, that's going to drag up SPY. SPY is going to drag up the IWM, and everything else is going to drag up with it. So if the big boys are running, guess what? Everything else is going to be moving up kicking and screaming and pitching a hissy fit. But that is the way it is right now until something changes. Interesting thing, real quick. I was looking at the Fed futures, and this is September calendar. The current rate right now is 525 basis points. But September, they're saying, well, maybe we'll get us a big cut here, 475 to 500. Is that the case? I don't know. Fed is sticking to their guns and saying absolutely no, no, no to the rate hikes. Excuse me, to no rate cuts this year. But the Fed funds futures is really disagreeing with that. So ask me in a few months to see where we are at, because that's just not, got a little bit of a disagreement there. Pricing in a cut versus what Fed Powell is saying, and that does bring up the question. And I'm sorry, I'm ranting because I'm saying, oh, it was time to go. But why would a recession not negatively impact stocks this go around? And there's two contrasting narratives. The optimistic approach is looking around that the Fed is indeed going to pivot later this year, while the pessimist out there says, well, we got a recession on our hands, and that in itself is bearish. We are in a slowing economy. And then it just kind of asks the question, okay, what exactly is a recession? And there's been that situation where, well, they changed the definition, where you have 2 consecutive quarters of declining GDP, but the Bureau of Economics tells us that it's a widespread decline in economic activity lasting more than a few months, which is evident in GDP, economic activity, employment, industrial production, and even retail sales. But right now, if you look at it, it's not quite. It's a little bit interesting. So you have the look. Okay, well, things are going to get bad, versus things. Yeah, they might get bad, but the Fed's going to pivot, and we're going to quickly get out of this recession and push on ahead. So that's your 2 arguments there that the market is currently having with itself. So historically speaking, recessions have led to two different outcomes. The one is increased labor productivity, and the other is where the Federal Reserve cuts rate hikes. And that's what we're looking at for September, possibly even November. But the bottom line on that is that the market is willing to currently overlook the uncertainties that are out there at this moment, as a recession may oddly provide a solution to some of the pandemic induced problems that we have been going through. So it's a wild world we live in. All right, that's going to be it. I appreciate y'all. If y'all have any questions, feel free to reach out. I'm going to get these notes posted for y'all because I hoard them until we're done with the live session. But hope y'all have a great night. I appreciate y'all sticking with me. If you have any ticket requests that you may want me to look at, just send them in chat and we'll be happy to take a look at it. I'm looking forward to tomorrow, and we'll be happy to get at it. Let's take a brief look here where futures are trading. I don't want that chart. I want this chart. Let's take a look. Yeah, they haven't gone anywhere. You're slowly consolidating through price and time. You're setting up a squeeze on the 15 minutes. So they either try to hold it, or they try to hold it and send things back up, or they send things lower. Maybe a retest 41.30. We'll see. All right. Have a good evening, guys. I'll see you guys tomorrow morning for our live session, and have a good one. Take care, guys.